Do we have to record right now at this moment? This evening? Sorry. Thank you all for joining our webinar this evening. And we'll go ahead and get started. So we would like to first welcome you to Making Your Money Work for You webinar, presented by the Economic Development Committee, chaired by yours truly, Tiffany Mitchell. The purpose of the committee is to enforce Delta's Economic Development Program initiative, Financial Fortitude. This program is to help program participants from our community to set and define goals, develop a plan to achieve them, and to put the plan into action. The webinar tonight is to provide insight to become financially disciplined to lead to financial independence. Tonight, we have Rhonda Johnson, who is VP of Mortgage Lending at Guaranteed Rate, to lead us. Our topic for tonight are credit and money management. We will ask that at the end of the webinar that you would complete the feedback survey. I will put the link in the chat shortly. And I just want to, again, thank you all for attending. And I'll just give a brief introduction of Rhonda Johnson. So Rhonda Mason Johnson, a proud native of St. Joseph, Louisiana, was born in 1978. She is a dedicated individual with a passion for empowering others through education and sharing her life experiences. Rhonda is a distinguished alumni of Grambling State University and Dallas Baptist University, as well as a member of the United States Air Force Reserves. She also is a mother of two, currently serving as one of the VPs of mortgage lending at Guaranteed Rate, the second largest retail mortgage company in the United States. Rhonda exemplifies leadership and excellence in her career. With a resilient spirit, unwavering determination, and a commitment to making a positive impact, Rhonda Mason Johnson embodies the values of perseverance, leadership, and service that in her remarkable journey. I now present to you Rhonda Mason Johnson.
Thank you. Thank you, Delta Sigma Theta, here with Ascension Parish and all that have actually joined us tonight. I'm here to simply pour into you, to educate you, and to empower you, something I absolutely love to do, and I do it naturally. We're going to learn the difference between credit and money and how to manage that. Those are two different ways and strategies, similar, but there's some distinct differences that I'm going to want you to learn. I'm going to be intentional about teaching you those things. So I've taught this class fairly often, and I absolutely love it. So with that being said, I'm going to be sharing my PowerPoint presentation, but I am asking that you don't just stare at the screen. I want you to engage. We're going to engage in two ways. We're going to engage in the chat box, as well as I'm going to ask questions to individuals that are here. So I want you to pay attention, as well as be intentional about learning something new and sharing that, being intentional about sharing that with family and friends. So while we get started, if you know someone that could benefit from this training, share the same link that you have, share it with someone, and they'll join us. With that being said, I'm going to pull up my presentation, and hopefully they can give me control so everyone can see the screen. Share my screen. Perfect. Can everyone see the screen? All right, with that being said, in the chat box, please state kind of what state you're from and what would you like to learn the most, credit or money or both. So with that being said, we're going to understand how to manage money versus understanding credit. I have to give a disclaimer. I am the Vice President of Mortgage Lending at Guaranteed Rate. Guaranteed Rate is not a credit repair company or credit reporting agency or broker or advisor. You acknowledge that Guaranteed Rate is not a credit repair company or similar related regulated organization under applicable laws and does not provide credit repair services. So acknowledge that Guaranteed Rate is not a consumer reporting agency, as that term is defined in the Fair Credit Reporting Act. So I wanted to put that disclaimer out there. Compliance. So managing money, managing credit. These are the objectives we're going to learn. We're going to learn how to obtain preliminary guidance on how to manage your money versus credit. We're going to establish some achievable goals. We're going to learn the basics of budgeting and managing debt, understanding the steps of maintaining good credit and also how to protect it, how to protect your credit and your money. It's nothing worse than building up good credit, but you don't know how to protect it, or making a lot of money, but you don't know how to protect your assets. So we're gonna dab a little bit in that as well. So when we're talking about money or property or anything that has value to it, we are simply talking about assets, understanding your assets and your liabilities. Assess your money and your credit goals, getting honest about your money and your credit. Knowledge is the new currency. I want everyone to note that down in the chat box. Knowledge is the new currency. In a debt-free life, we all want that. Knowledge is the new currency. When you hear me repeat something twice, it's very, very important. Knowledge is the new currency. What is your relationship with money? So I'm going to ask the question to you all right now. Are you honest with yourself about money? And there's no shame here. There's no judgment here. Do you financially lie to yourself and say you can afford something that you cannot afford? Are you living above your means and you want to get better? We all have been there, so there should not be no shame in your game. Knowledge is the new currency. The reason I say knowledge is the new currency, you can't build wealth if you don't have the right knowledge and knowing how to apply that knowledge. If you don't know how to do that, you can give someone hundreds and thousands of dollars and they will waste it. They will destroy it in a sense, and it will not work for them. And when you think of money, I want you to think of currency. Currency moves. When you think of a current, it actually moves. When you are thinking about money or picturing in your mind money, is it moving or is your money stand still? So in the chat box, take a picture, put a picture in your mind about your money. Is it moving or not moving? And just put that in the chat box. Maybe some is moving, maybe some is not. So it's important to understand money, how currency, you want it to move. If you want your money to move, you're really saying, I want my money to grow. I want it to invest it. I want to protect it. And I want to build wealth. So with that being said, access liabilities. Liabilities are literally things that lose value as well as debt. And you always want to have less liabilities and always more assets. How many of you all want to get to the point where you have less debt and more assets? If that's you, I want you to check less debts, more assets. Less debt, more assets. Credit goals. It's important that we set the bar high. I did this with the previous class. I want everyone to set a goal, a credit score goal of 760. Put that in the chat box. I want a 760. 760. When you hear people say, oh, you just need a 620 to buy a house, or you just need a 680, you're talking about marginal fair credit. If we're going to teach the community, if we're going to impact the community, I want you to strive for a 760. Why? Because a 760 is considered a perfect score. You are guaranteed to get the lowest offers, lowest credit scores. You're going to always get the best deals, all of that. Great job, Ms. Ford has a 760. Not everyone is there. I'm not there, but it's something I'm striving for. So here at this program, I want everyone to set a new goal. 760 or higher should be your goal when it comes to credit. And you want to do your best to be in the 760s with all of the credit bureaus. Try to have all your scores high, because when you go to buy a mortgage, we look at the middle score. So if you had a 740, a 730, and a 760, we're taking the 740 score. So it's important that I'm teaching you all to strive for the highest, not the minimum, not the bare minimum, not the score that just gets you barely approved. I want you to be able to get approved to buy anything that you want. But I also want you to be smart with your credit. You don't ever want to borrow more money than you actually need or have to be able to pay it back, or the capacity to build that credit up that way. So it's important that you understand your money. How many of you all will be honest and say, I don't have a good relationship with my money? If you can't admit that, you're not going to get better. And this is not a training to make you feel bad. This is to get real, get honest, and get better. And how you get better is through knowledge, it's through training. It's important to do that. So it's important to evaluate your relationship with money and being honest with where you are. Now, life can happen to everybody, you all. So don't allow your identity to be tied into your credit. But understand this and make note. Your credit is your financial character. Put that in the chat box. My credit score is a reflection of my financial character. My credit is a reflection of my financial character. My credit score is a reflection of my financial character. So when you go to borrow something, or you looking to, at the end of the day, borrow money, this is how you're looked at, your credit and your income. So it's important that you always have a low debt to ratio income status. So type low debt to income ratio, low. And that means low debt, higher income at all times. I always tell myself, if I'm going to borrow money, do I need to create another stream of income, or do I need to pay something off? You always want a low debt to ratio income. That way you feel confident when you can go actually buy something, and you don't have to be turned down, because I make more money than what goes out. All right. Now, this is going to be one that a lot of people don't like to admit. It's budgeting. How many of you all have a budget in your mind, or you have a budget on paper? So I want you to put in the chat box. If it's mine, it's in your mind, but not on paper. All right. Thank y'all for being honest. Thank you so much for being honest. So those that typically do a budget on paper typically do better. So this training is about also going to encourage you to actually put a budget on paper. Matter of fact, we're going to send you an actual Excel spreadsheet that has a budget. If you want a budget, doesn't cost you anything, say, I want a budget. I want a budget. I want an Excel spreadsheet that has a budget. I want a budget. Very good. So when you're budgeting, it's important that you calculate your net income, not your gross, your net income. For any young people that are on here, the net income is what you bring home after taxes, after insurance. Track your spending weekly. Weekly. Set realistic goals that are achievable. That's important. When you set goals that are too big for where you are now, sometimes that can discourage you. Put it in writing. I don't know about you all, but I see some people on here that I know that are very, very accomplished. And I mean, very, very accomplished. And if she don't mind me calling her out, Dr. Renee Charles is on here from New York, highly, highly successful woman of God. And trust me, she has a business plan. She has it in writing. So I want to encourage you all, put your plan in writing. Put your plan in writing. Also adjust your spending to stay on budget. So that's the beauty about being able to be honest about where you are and what you have. You got to know when to pivot. You got to know when to adjust. If you know if your budget is $100 for going out for the month, you're probably not going to try to go too many places in that month because you're going to adjust your behaviors. How many of you all are willing to adjust your behaviors in order to stay on budget? How many of you all is willing to have delayed gratification? If you're willing to have delayed gratification, put that in the chat box. Delayed gratification. You can wait on those new shoes. You can wait on that new hairstyles. You can wait on that trip in order to get to your goals. So let's talk about this. What are some money goals that you want to have? How many of you all want to save under $50,000 this year? How many of you want to save $10,000 this year? It's important that you put a number to your goal. Many of us on this call are educated, hardworking people, work every day. Some of you all have already accomplished the goal of homeownership. You've accomplished the goal of getting your degree. But how many of you want to add, I've accomplished saving a significant amount of money? So put in your chat box how much money you would like to save. How much money you would like. We all got goals, you all. And I'll lead the pack. I want to save $50,000. I want to save $50,000. So what's your goals? What's your money goals? We've talked about the credit goals. Let's talk about your money goals. Very good. Dr. Charles wants to save 150. Very good. Anyone else? Very good. So it's important, 40. Very good, Sydney. It's important that you review your budget weekly. Review your budget weekly. So I don't know about you, but when I had a budget in my mind, I wasn't reviewing anything. But I have an Excel spreadsheet that I look at every Sunday. and I make adjustments. I literally make adjustments. What can I do? What can I do? What do I need to move? Oh, this is a no, this is a yes. So it's important that you will budget. So if you are committed to budgeting, or you want to at least get started, put in the chat box, I'm committed to budgeting. I'm committed to budgeting. It's important. It's vital to your future. You don't want to get into your late age and you're just learning how to save money and budget. So if you're truly are interested in committing to budgeting, let's do this. It's nothing more gratifying to have a nice bag, a nice house, but you got more money in your bank account. And to also to just actually accomplish a goal that you've never accomplished before. To say, hey, I want to accomplish saving $100,000. That's major. It's a major accomplishment. Just like some people say, I want to run a marathon. Okay, run a marathon. It takes discipline. You can do the same thing. But a part of budgeting is eliminating unnecessary expenses. How many of you all are interested in eliminating unnecessary expenses? And if so, just put in the chat box 2 things that you're willing to eliminate, that you don't need, you know it's unnecessary, and you know if you cut it out, it will save you some money. Who's willing to just put themselves out there and say, hey, I want to limit myself eating out? Very good. So Ms. Munson, you want to stop eating out. What would you say the average amount you spend on eating out? Same for you, Ms. Wade.
A week, I would probably say about $150.
Okay, so let's do the math. 150 a week times 4. We have a mathematician on here, Ms. Kwame Ford. She's a Delta in Shreveport, Louisiana. What's the number, Kwame? 150 times 4, 600. That's 600. Now multiply that times 12. $600 times 12. 7,200. Now multiply that times 10 years. $72,000. Ms. Munson, if she just cut out eating out every week, she would have saved $72,000. Now imagine if she was taking the money from eating out and putting it in an investment account that was making even more money. Now, I want you to all now think about and be honest with yourself. What could you cut out and do the math? What could you cut out? Multiply it times weekly. That's going to give you what you spend monthly. Multiply it times 12. And then multiply it then again for a certain amount of years. Where do you want to be in 10 years? The money is there. The money is there. And I want to shift your mind from being consumers all the time. You consume, consume. How can you be less of a consumer? That's a big part of managing money as well. How do you consume less? Do you actually use that gym membership, or is it just taking money out of your account every month? That Amazon Prime account that you probably don't hardly use, but it's taking money away from you, $19 or $20 every month, it starts adding up really, really quickly. So I want you to look at your expenses and actually see what can you cut out. So Ms. Munson, I want to see you save a ton of money because you absolutely can do it. Another way about managing money is no overdrafts on your bank account. Put that, I want everybody to put that on your bank account. I'm in this chat box. No overdrafts. Overdrafts is the easiest way that you make the banks rich. No overdraft fees. They're typically $32 to $35 a pop. You literally give your money away. You give it away. You absolutely give it away. Stay away from overdrafts. Okay, so it's important that you understand that budgeting should be essential. Everybody should have a budget. And I don't care if you make 6 figures. I don't care if you made $1 million. Live on a budget, because you could be up today, down tomorrow. Life happens very, 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 very fast. And you want to be in a position where you can do that. All right, now we're going to go to managing credit. This is important. When you're first getting started off at life, especially those that have been to college, currently in college, it's important that we as individuals not only just understand our credit and what is credit, but how to protect it. As a mom, something I'm very proud of, I never used my children's credit, no matter how hard it got. I teach my daughter about credit, but I've never used her credit. Don't allow anyone to use your credit. Do your best not to co-sign for anyone, not even family members. Okay? So it's important that you know this about credit. Your credit score is the reflection of your financial character. So there's this thing that I call monitoring your credit. How many of you all monitor your credit weekly? How many of you monitor your credit weekly? How many of you monitor your credit monthly? Bi-weekly? Monthly? 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 It's important that with the increase of technology, the increase of technology, the increase of AI. I was on a financial meeting just the other day. It's important that you monitor your credit weekly now. Lending institutions are getting hacked all the time. Your data is being sought after on a daily basis. So I want everyone to shift. Those that are doing it monthly, shift to monitoring your credit weekly. When you get these notices that, oh, we've been hacked, don't ignore that. We're sending you a message because our systems were broken into and your identity. Go and check your credit. Check your credit on a weekly basis. Please do that. I literally can start, you know, just the meetings that I recently had was just, they were really terrible of what's going on in this country. So with that being said, when it comes to credit, you're going to get an Excel spreadsheet. You make a list of your debts in Excel. And Excel is basically a calculator. Learn your due dates. It's important that everything that is reported on your credit bureau, you know the due dates, but you also know the credit reporting due dates. Those are actually 2 different dates. I have to stress that. You have a due date and there's another date that is reported to the credit bureau. How many of you all actually know your credit reporting due date? If you don't know, that's okay. This is what this is for. Very good. Your credit reporting due dates. That's the date they report you to the credit bureau. And I like to keep it simple. If you have a low balance on your credit card or your credit limit, you want to get reported in a sense as an A. If you're getting reported as an A, you really are getting reported as a higher credit score. Your credit score is going to jump up. And if you ever manage credit, if you maxed out your credit card and you hardly paid anything on, or you paid the minimum and you paid it on time, but your credit score went down, that's because you had high credit utilization. I want y'all to put this in the chat box. Low credit utilization. Low credit utilization. When it reports to the credit bureau, you want to make sure that that balance on your credit card is low. So I'm going to teach you what I call my 5% rule. 5% rule. Sydney is on here. If a credit card has a limit of $500, what's 5% of $500? $25, you all. Never ever allow more than $25 if you have a $500 credit limit. Never allow more than $25 to be reported to the credit bureau. Pay it down. If you need to use it, live by the 5% credit rule. You hear people say all the time, oh, it's 30%, it's 20%. You all, as a lender, literally use the 5% rule. You will thank me later, I promise you. So look at your credit cards, gather them up. If you have 5 cards and all of them are at $500, do the math. Get those balances down and you're going to see your credit jump like Jordan. It's going to jump like Jordan. And also, when it comes to credit, never ever have a 30-day late. I need everybody on this call, everybody, put in the chat box, no 30-day lates, ever. A 30-day late will set you back. It will get you denied. It will take you almost a year and sometimes 2 years to recover from a 30-day late. I don't care if you had to pay the minimum because things were tight. Never ever have a 30-day late on your credit report. A 30-day late will drop your credit score almost 50 points. And if you're late on an installment loan, it's worse. You have revolving debt and then you have fixed debt. Revolving is a credit card. A car note is called installment because it's a fixed note. But the rule of thumb is never have a 30-day late. I have to stress that because some people say, oh, I was 30-day late 3 times. Oh my God, that's not good credit. That's not good credit. If someone came to me and they told me they was late 3 times on their car note this year, there's no way I can approve them. And they can make $300,000. I cannot approve them. The guidelines will deny you. That's how serious this is. Never ever have a 30-day late. Pay off high interest debt. Limit your credit card usage. Monitor your scores. Check your statements for irregularities. Also, you all, many of you all are not aware of your credit card terms. Your credit card has terms. How many of you know your annual fee amount? Do you have an annual fee amount? How many of y'all actually truthfully know what the terms of your credit card is? Does everyone know what their terms of their credit card is? Do you have an annual fee every year? Do you know when it's due? If you don't know, this is what this class is for. Look into what your annual fee is, what the amount is, and see if you can get it waived. Because if you forget about it and don't pay it, that's the opportunity for the creditors to now increase the rate on you. So it's important that you understand that. All right, we went over the ways to improve your credit. You monitor weekly, not monthly, weekly. Pay your bills on time and know your credit report and due date. We went over low credit utilization, or the 5% rule. I want you all to commit to always only carrying a small amount of debt. Now, those that are not homeowners, you're going to eventually get that. I'm not talking about that. Any credit card debt, make sure it's very, very low. Use the 5% rule for revolving debt. Don't have unnecessary credit, low debt to income ratios, and build and keep positive credit history. Let's talk about credit history. So
before we move on, I mean, this is very good information. Thank you so much for that.
yes.
We would like to just take a little break real quick, and I have a fact question to ask.
Okay, sure.
So I'm going to ask the audience the question, and for the person that responds, I guess it's also testing your typing skills. The person that responds in the chat, the fastest, will win a gift card. So based on the information that we have, the information we have heard thus far, this is some valuable information. I'm just sitting here taking all types of notes, and you think you know something and you may not really know it, right? So this is very good information. The question that I have is, the question that I have is, what is one way to manage your money? So she has given us a plethora of information, but what is one way to manage your money? So the person that can put that information in,
Oh.
so let's see who types fastest. I think that's the, let's see. Kim, can you help me?
It's Kwame Ford. Kwame Ford.
Kwame Ford. Awesome. You write it down.
Yes.
That's it. That's ultimately it. Just write it down. And when you start seeing those numbers, right, you're like, oh, wait, just from the example that from Kirsten Munson, just from her example, just using the amount that she's eating out and just calculating, you're like, oh my God, right? To see the numbers, that makes a huge difference. Thank you so much, Kwame, for that. I will be sending you a message just to get your email address so we can send you that gift card. Thank you so much for participating. Thanks again. Rhonda, you can continue.
Awesome. Thank you so much. Thank y'all for participating. It's very, very, it's really, really positive. So we've talked about SCORE. We talked about how to protect it. We've talked about low credit utilization. Let's talk about credit history. Why is credit history important? It indicates likelihood to make your mortgage payments on time or big investments. You have a history of not overborrowing on revolving accounts, indicates good money management. History free of derogatory events such as bankruptcies, indicates responsible handling of debt. You all, we look at history. We don't just look at the score. We look at your history. And when I look at a credit report, I'm looking automatically first, do you have any 30-day lates? And every month you're reported to the credit bureau. So it's like a report card in a sense. in you get in the 30, you want zeros in every box, 30, 60, 90, 120. You don't want to ever be in one of those categories, because now we're calculating how many 30 days late you have. And the history is so important that a lot of times some people don't even realize that they actually are being reported. For example, if you've ever gotten behind on a car note, instead of them taking the car, they'll give you a payment arrangement. Let me teach you something. They give you a payment arrangement. Well, you set up an arrangement and they say, okay, you're going to pay, instead of 400, we'll allow you to pay 250 or 200. And you are doing exactly what they, what you agreed upon, to pay 200 instead of the 400. Well, what they didn't tell you is that you accepted that agreement, but they are still reporting you to the credit bureau every month as a 30-day late. So did they really help you or did they hurt you? What do you think? Put it in the chat box. Did you really get the help or did it hurt you more because you're still being reported to the credit bureau every month late? Hurt, yes. It's called a rolling day 30. The reason I want you to know this is because people have a sense of relief when their creditor is working with them. And yes, they may not be taking it in the moment and you can recover over time, but they are hurting you. It's better to give them all of their money, including the fees. Don't be fooled by the fees. If you had an outstanding balance of $1,000, but they tacked on an additional $250 in fees, they're still reporting you to the credit bureau as negative because the fees were not paid as well. You have to fully clear the balance in order to get back into the positive. So make sure that you don't fall for the okie doke when it comes to payment arrangement. If you have the money to just give them all their money and get back straight as quickly as possible, I strongly urge that you do that. So don't fall for that, because that's what it really is. You're still constantly behind until you fully get caught up, and it is hurting your credit report. So your history is everything. So all of us have had to start off somewhere. The longer your history is on a certain card, that particular card is going to always score the highest. It's going to be the heaviest weight on your credit. For example, someone that just got a credit card and it's 1 month old or 2 months old doesn't have a lot of history. But someone that's had a card for 10 years, 15 years, that card is going to have good history on it. It's going to be important that you never close that card, because when you close that card, you are wiping out the history. You're wiping away the good history on that card. So now you wipe out that history and people, why did my credit score drop? You closed the oldest card that you had, and it had the best and the longest history on it. So what I'm teaching you all is never close a credit card that had the longest history on it. And don't take out cards unless you know you want that card. Do your research on it. Just don't grab a card because they offered it to you. The better your credit gets, the more offers you can get. If you don't want to fall into that, you can opt out to receiving all of that if you're not disciplined enough to say no. Also, when you're out shopping or doing things, ask yourself, do I really need this credit or do I want this credit? And if it's a want, turn it down. Turn it down. And if you're not so disciplined yet, lock down your credit report. Lock down your credit so you can lock and freeze your credit so that if you are impulsive, when you do it, it ain't even going to go through. So it's important that you look for ways to protect your credit and protect, your behaviors until you've kind of gotten there. The other things, derogatory, do your absolute best not to let anything go to collections. You all, collection agencies, unfortunately, are some of the most devious type of companies out there, I must say. And they will wait till you get ready to buy a home and have a trigger alert on your credit and literally make it look like it's a whole new collection and drop your score to prevent you from buying a home or car so that you can pay them first. So it's important that you do your best not to allow anything to go to a collection agent. Has life happened to everybody? Absolutely. But I want you to do your best not to allow anything to go to collections. And if you have something in collections, do your best to clean it up. And that's something about credit. It can be fixed. Will it take a long time? Yes. It's quicker to, I like to describe credit like a marriage. It's easy to get married, take a long time to get a divorce. We have Judge Turner on here. I'd like to acknowledge her. Thank you for being on, Judge Turner. And as a judge, she knows it's real easy to get married, but it's going to take a minute to get a divorce. And that's how credit is as well. It's easy to get. It's hard, and it will take time to straighten it out and to recover. So it's important that you understand the value. Your credit is like your name. If you want a good reputation, you want to have good credit. So you want to protect your name, protect your reputation, because it is your financial character that's being looked at. How to manage your money. Set short-term and long-term goals. I have some short-term goals. Hopefully you do as well. Set a short-term goals. Review your financial situation regularly. You can't review your situation if you're not willing to be honest about your situation. Seek financial advice. Come to trainings and stuff like this when you see them. Educate yourself about personal finance. Invest in your future. Avoid unnecessary fees. How many of you all can think of some unnecessary fees right now that you've thought about it, you see it, but you haven't done nothing about it? How many of you all got some unnecessary fees? If you just take the time, you can shut it down. I guess nobody. Okay. Consider refinancing loans if your credit score is good enough to do that. So I hear people say, refinance. Well, if your credit history is not good and your credit score is not high, refinancing, you're just getting your credit pool and damaging yourself even more. Practice frugality and discipline. How many of you all would like to learn how to be more frugal and would like to be more disciplined with your money? Anybody? Anybody? I would. Thank you, Miss Corey. Miss Ashanti has been on. She said she wants to be more frugal and disciplined with her money. Absolutely. Thank y'all for your participation. We all do, you all. Frugality is vital. It will get you, it will create opportunities for you. I won't call them out, but I have some clients on here that are interested in learning. And I remember looking at their file and I said, this couple is so frugal. And when you're willing to live below your means, so one day you can accomplish your goals, such as homeownership or being able to pull equity out of your home and send your kids off to college or do whatever it takes to save money or invest, it's important. It is important. And it's about discipline. Got that. Now let's go to improving your money management. Living on a budget. Don't financially lie to yourselves. I can admit at one point I did in my 20s. I financially lied to myself. I can afford this. I can afford this. I really couldn't afford it. So when you're able to be honest with yourself about your money and being able to say, I can't afford that right now. I can't afford that. Or I simply don't, that's not a good investment for me. Learn to be just honest with yourself. If you can't afford the trip to Dubai, don't put it on the credit card and go and struggle for a whole year paying it back. So I can't afford to go right now. And be proud of it. Discipline of saving. Saving money, you all, is not about the amount of money. It's a discipline. If you got $50,000, but you don't have a discipline of saving money, you're going to spend $50,000 very quickly. Pay off high interest debt systematically. Adjust your spending. Adjust your expense to a realistic budget. Educate yourself constantly about personal finances. Why is money important? Because it provides you financial stability and debt management. You can manage your debt when you're able to manage your money, and you clearly can have financial stability. Achieving financial goals and emergency preparedness. I just recently shared with my daughter, okay, now you got this, you got that, now it's time to have an emergency fund. The ability to build wealth. When you have money that you've saved, you can invest. You can reduce financial stress as well to improve your credit score. And I don't know about you, but it's so, it feels really good to have good credit and have money saved, even in tough times. What is money limits? Know what your credit limit is. What is a withdrawal limit and why it matters? What are transfer limits? You need to know these things on your credit cards. And there's something else that I didn't mention in the last class, and I want to share with you all. There's a such thing as credit insurance. I'm going to put this in the chat box. I want you all to call your credit card company and ask them, can you get enrolled in credit insurance? Credit insurance is, in the event you lost a job or you got sick, this insurance will step in and not allow you to make a payment, but it also would not report you to the credit bureau every month. And I do believe also it'll make the minimum payments for you. So I strongly advise you all to call your creditors and find out about the credit insurance, and if so, enroll in it. It's probably $1 or $2. It's usually very, very low, Miss Parker. Very, very low. Life happens, people get laid off, this economy is very, very tough. All right. Another thing, you all, we're living in tough times. Always have more than one stream of income. I'm just going to call out a few. Invest in stocks. If you are expert in the field, consulting, a cleaning business, I do cleaning on the side, real estate, event planning, podcasting, web development, therapy, financial services, home-based catering. There's doing taxes or other things, but create another stream of income. When you create another stream of income, you are going to have more options and you're going to have more control. That's my presentation for tonight. We're going to open it up for questions, but I do believe the Deltas have another question for you all.
Yes, thank you so much, Rhonda, for your information. It's very, very beneficial, and I'm sure everyone has gotten something out of it. We have another question for you that will allow you to win another gift card. So again, let's see your typing skills to answer the question. So our next question is it better to have a credit card for over 10 years, 5 years, or a newly opened credit card?
Woo, it was fast.
Oh, yeah. All right, we have Brittany. I think it would be 10 years, of course, to have that history, as Rhonda mentioned. We want to have a history of credit. So 10 years would be the correct answer. And Brittany guessed won that. Congratulations, Brittany. Now we would like to open it up to questions. If you have any questions,
I would like to ask,
okay.
I want to hear from you all. What have you learned new that you didn't know? Let's see. 5% rule. Very good, Brittany. Very good. How many of you all want to live by get to the point where 5% rule? Credit insurance, yes. You'll also learn how much money you can save if you didn't eat out like Miss Munson eating out every week, huh? And some people just have it in their budget that they can do that. But I think it's important that you evaluate what you unnecessarily spend on food, eating out, shopping, and all of that. It's very, very, very important. Long-term credit cards are better. So when you get a card, take care of it. Take care of it. Do your absolute best. The 5% rule. Anything else? Anyone else?
I know we did have I'm sorry, you finished with that question?
Yes, ma'am.
Anyone else?
Yes.
We did have a question. Oh, I'm sorry, Javella Williamson?
Yes, Rhonda did mention about creditors supposedly helping you to improve with your payments, but at the same time, they're reporting you to the credit bureau. So that was something I didn't know. That was an interesting point.
So just to piggyback on what she's saying, everyone needs to understand that there's a due date and then there's a credit reporting due date. You want to make sure that by the time they report you to the credit bureau, you want to make sure that your balance is down. And I forgot to mention this, you all. Your credit reporting date is typically 2 to 3 days after your due date. So let's say, for instance, your due date is on the 15th, but they're reporting you to the bureau on the 18th. So it's important that you call and find out exactly what your credit reporting due date, and by law, they have to tell you if you ask. But if you don't ask, you don't know. There's a question in the chat. Let's see. What about paying before the statement date? You're just paying early, Miss Guest. That's not a bad thing. Just make sure that when you pay early, don't go back and use your card before the credit reporting due date, because now they're reporting what your balance is at that time. So that's important. Yes, ma'am. Someone had a question. Miss Corey has a question. Go ahead, Miss Corey.
Yes, hi, good evening. Thank you so
Evening.
much for all this great information.
welcome.
Question about, I know someone wrote in the chat earlier when you were talking about the 760 credit score, and they said
Yes.
there were certain percentage points away from that. What are things you do to increase that score, and is there a time activity ratio? So if I paid off a credit card today, next month, will my score go up 10 points? You know what I mean? Are there certain things you can give us as far as ways to increase your credit score to get to that 760?
Absolutely. The longer you actually pay your credit card bills or credit on time, that's going to increase your score. But also having a good mixture of credit. And what I mean by that, having an installment loan or having a revolving debt card or small card. When you have typically all of the same, you don't, I mean, you can still have a high credit score, but having a good mixture in longevity, Miss Corey, is the key to getting that score up. And low credit utilization. So good history, low credit utilization, and time, obviously, are the best indicators. And those individuals that are a few points away, they'll eventually get there, but there is no formula that says, okay, if you pay this credit card off, it's going to jump up 20. Now, I have seen an average where you'll get at least a 10-point increase, but that depends on the card, the limits, the history. So there's a lot of variables there. I hope I answered your question well. Mrs. Williamson.
Yes, one thing that I found out in paying too early, that might be a detriment to you, because what happened, I paid very early and I thought I was taking care of my payment for a certain month. But then I think it was a statement that came out at a later date during the month. And when I looked at the statement, a payment was still due. And I questioned that, and I was told that because I paid it early before that statement came out, then I ended up paying 2 payments in 1 month, which wasn't bad, but that's something that I realized, that if you pay a little bit too early before the statement date comes out, then you'll have to pay again.
So it's important that you, I would say, build a relationship or have a communication with your creditor about their terms, okay? That's very, very important. The terms, the frequency of payments that are allowed. Like I have a card that allows me to pay anytime, anytime. So it's important that you learn that from your actual creditor. Anyone else have a question? There are some really good questions, very good questions. But, you know, oftentimes, especially in our communities, we hear people unfortunately say all the time, oh, let's focus on a 620 or 630. You don't want to do that. You don't want to do that. Set the bar high. Set the bar high where you have excellent credit and do things that actually make your situation better. So we all have work to do. There's always something we can do to make it better, and just keep striving, keep going. Don't settle for the bare minimum or setting the bar low. Don't do that. Don't do that to yourself. Don't do that to your families. And also, don't teach the bare minimum. Don't teach, oh, that's good enough, because it's not good enough. It's not good enough. Good enough ain't good enough. We want to be striving for excellence. That's where we make true impact. So I have thoroughly enjoyed Ascension Alumni. Thank you all for having me again to teach this class. I will always do this for you all as long as you all need me to. But I want the public to know that as a lender, a mortgage lender, I look at credit all the time. I look at history, payment history all the time, and I determine if I'm going to loan them money. But I don't I'm not an if lender, I'm a how lender. So that's why I like to educate. I like to educate you so that you can be better. You can be better with your credit, you can be better with your money. So I want everyone to be financially prosperous and I want everyone to have good credit, but I also understand life happens to people. So if you ever just want a private conversation about how you can do things better, feel free to reach out to me. I'm going to put my information in the chat box. You're welcome to call me, reach out to me. And if you want this budget sheet, we're asking that you put your email address in the chat box so I can send you this, we can send you the budget.
Well, we have everyone's email
Okay,
address
we'll email it out.
registering, so we'll go ahead and send that out to everyone. So again, we would want to thank you all for joining us tonight. This is actually Rhonda's second time presenting to Ascension alumni on this topic, and I just want to really take the time to thank her and Rhonda, just so that you know, I will be meeting with you to present to you this award. I just wanted to, I hope you can see it.
Oh, wow.
But
I
this
had no
is
idea.
a participation award that we just want to give, thanking you for that. And it just reads Ascension Alumni Chapter of Delta Sigma Theta Sorority Incorporated, Award of Appreciation presented to Rhonda Johnson, VP of Mortgage Lending, Guaranteed Rate, for presenting the Economic Development Committee's Making Your Money Work for You webinar 2024. So just wanted to say thank you for that.
Thank you so much. I'm honored. Thank you.
Yes. I don't know, do we have a question? I don't, okay. Okay, so really thank you all. I do have some closing comments from our Vice President, Ashanti Corey.
Right. Thank you, Tiffany Mitchell, and thank you again, Miss Rhonda Johnson. It's different when you're hearing the message from you versus your mom or your dad, so I was really listening. Thank you for all the great information. This is, like you say, your second time coming. Please come back. It'll start to stick the more we hear it. If you could just give some rounds of applause, something in the chat to her. She gave a lot of great information. Thank you so much for being with us this evening. Thank you to everyone who joined us this evening. We hope you'll come back and join us for future events. Please check out our social media and our website for any of our upcoming events. This does speak to our 5-point programmatic thrust of economic development and increasing wealth in the Black community. So thank you, Ms. Johnson, for your time. Thank you, everyone.
Thank you.
Have a great evening.
Ms. Corey, I'd like to acknowledge Judge Turner. Judge Turner is the individual, she's the lady I reached out to because I wanted to start teaching these classes. So Judge Turner, thank you so much for reaching out to Tiffany and all of your sisters and allowing me to do this. And thank you for all of the people from online and social media from all over the country. I see New York on here. I see Texas on here. Louisiana's on here. They are in the house. So thank you all so much, Delta Sigma Theta, and I'm here for you anytime you need me. Thank you.
Thank you so much.
Thank you so
Everyone
much.
have
Have a
great
great
evening.
evening.
You too. Bye-bye.
Bye-bye.